Mr. Rose of Tennessee, recognized for 5 minutes.
Thank you, Chairman Hill and Ranking Member Lynch, for holding the hearing today, and thank you to our witnesses for your time in being present today. I'm proud to say that my home state of Tennessee is a leader in blockchain investment thanks to the forward-thinking approach we have taken to regulation. One such example is our recent passage of legislation that allows limited liability companies to register as decentralized autonomous organizations, or DAOs. At the time of the passage, Tennessee was only the second state in the country to have such legislation signed into law. Mr. Ovello, could you explain what DAOs are and why they have become so popular?
Happy to. Thank you for the question, Congressman. I think DAOs, if you ask 30 different people, you might get 30 different answers. But the way that I like to think about it kind of starts from this primitive that there are individuals who are using blockchain technology or leveraging blockchain technology to create a governance system without a centralized management team. And what the same aspects that exist in all these different organizations are a lack of a centralized management team. There are collective decision-making across the groups that are organizing kind of natively on the internet. And typically there's a governance token involved. That's not in every single case, but there's typically governance token rights. As far as why they're becoming popular, I think it's when there is excitement within a group of people that are interested in a different project. Now that can be DeFi, that can be investment clubs, that can be social groups. There's a whole host of kind of activities that people engage in through DAOs. But I think the ease with which they're able to organize initially makes them popular. As far as long-term, they can be, depending on the services that are being offered by the DAO, and they take on a variety of different forms. Limited liability companies, different foundations overseas, sometimes there's sometimes groups that operate without entities. So they see the flexibility that's offered through the DAO kind of organization, I think has given rise to its popularity.
Thank you. Ms. Tuminelli, last year the Internal Revenue Service proposed a rule requiring broker reporting of sales and exchanges of digital assets. This rulemaking seemed to be contingent on the assumption that broker businesses are in the position to know a person's potential tax obligation. Is the IRS proposal workable?
Thank you for the question. And in short, no, it is not. The proposed definition of broker is extremely broad. As you said, it puts anybody in a position to know in the place where they have to report. For example, right now, I'm sure members of your office have started fantasy football. At the end of the season, the commissioner of your fantasy football league is in a position to know the winnings or loss of any person who participated. That person would be a broker under the IRS's new rule.
And what is the status of the rulemaking?
So right now, the IRS finalized the part of the rule that applies to others outside of DeFi, and we applaud them for that. They did take the right tack in trying to learn more about DeFi before they finalized the rulemaking as it applies to DeFi.
And Ms. Tuminelli, I think that my colleagues on the other side of the aisle in the Biden-Harris administration scapegoat the digital asset industry as a mechanism to avoid tax liability. How can the DeFi industry support tax compliance?
Sure. So obviously the tax liability for an individual is on the individual themselves. But as an industry, of course, there are software and technology solutions that make it easier for a person to assess their tax liability and pay that tax liability. But ultimately, it's their responsibility as an individual to pay their taxes.
Thank you. Under President Trump, the Financial Crimes and Enforcement Network released guidance in 2019 that has been one of the few regulatory actions that has provided legal clarity for DeFi developers and businesses. However, as I was unsurprised to learn that the Biden-Harris administration's Department of Justice has poured cold water on that guidance and taken a more aggressive enforcement path. Ms. Tuminelli, could you explain what impact that has had on the DeFi industry?
Sure. So as you said, in 2019, FinCEN finalized guidance that was very helpful to the industry and explained what a money services business was in the context of providing and publishing software. And the industry followed that guidance for years. But just this year, the Department of Justice took the position that that guidance is merely a suggestion and that they don't need to comply with it or listen to it. And it's really unfortunate that two entities in the same government are disagreeing on what the law is, and the consequence is a person's liberty.
Thank you, and my time has expired. I yield back.